What happens to the Europe dynamic when Chairman Powell does 2 or 3 more rate increases?
Well, 2 things. Firstly, as an interim, it gets wider in terms of that gap between the US and Europe. But the reality also is that the risk is Europe hikes earlier rather than later now. When you look at headline inflation in Europe, it's very close to the ECB's target. If you think of the trajectory of growth in Europe, it's biased to be stronger, not weaker. I mean, Europe's had a very poor first quarter. The risk is stronger into year end. So when you look at pricing for the ECB, the risk is actually there's no reason they can't move rates June of next year.
And so if you've got the flow there to the U.S. because of the higher rates, maybe even higher real rates, Jeremy Stretch, it comes down to the euro nuance, and the outlier call is a substantially weaker euro, even back to a parity watch. What would it take to drive euro weaker?
Well, I'm certainly somewhat surprised to hear the word parity watch in any
Exactly,
in any discussion.
It's not there, is it?
It is not, and indeed, when we have seen runs lower, I've never been one to argue that we should be necessarily seeing towards parity. I think if we are going to see the euro heading lower, and that isn't our core view, I would agree with Nick that I think the risks are that the ECB tighten a little bit earlier because I think their forecasts are inconsistent with their language. But if the euro is to really cheapen up, I think it probably needs to really see a continuation of political risks in the Eurozone. That's, of course, one of the reasons why the euro really struggled in the early part of 2017 because of political risks. So I think those need to further move up the market's radar screen. And I think also the expected rebound in activity after that weak first quarter also needs to fail to be seen. So we need to see data proving to be rather disappointing. We need to see political risk starting to come back in. And then we will see investors starting to give back some of those still, albeit smaller, euro longs that are still evident in the market.
Very quickly, is this a divergence, euro versus Fed play?
I'm not sure it is. I think the market is generally relatively well priced for where the Fed is going. I don't think you're going to see a significant acceleration in terms of Fed pricing. So I think in the context of the ECB, then I think there is a risk that markets are underplaying the prospect of tightening into 2019. And now that we're starting to consider the process into 2019, I think that needs to be kept in context.